Good day, everyone. Well, as you probably all know, the GOP leaders and Obama are going to be meeting sometime this week to discuss the standoff. Markets are rallying on that news. They were waiting for some sort of notice from either side that indication of a resolution to this standoff would begin sooner than later. Prior to that, as we discussed, there'd be a lot of volatility in the markets. The markets had gotten hit very hard the last few days, leading stocks as well, many off their peaks or near their peaks. And now, of course, today we've got a market that's up well over 1% in all the major averages. The question is whether both sides are going to continue to argue and debate and hem and haw their positions and get closer and closer to that 11th hour, in which case we're going to see more volatility probably to the downside. And this is a kind of risk-off environment where excessive volatility, of course, means greater risk in one's trading accounts. You've seen how fast some of these leading stocks can come off. So being in the safety of cash is not a bad idea. If you're very quick on it, quick on the trigger, you can do some day trading or you can do some swing trading. But again, it's very headline risk-oriented environment. And in other words, sometimes you can just flip a coin to see whether they're going to reach a settlement this week when they have their talk, or sometime closer to the 11th hour. I believe October 17th is one critical deadline. So that's a week away. There could be some market nervousness ahead of that. Gil?
Yeah, this is going to be an interesting webinar because I'll probably be trading in the middle of it all. My approach this morning on the gap up on some of these names that have been weak is just to come in and short them. So, I'm shorting this rally, at least testing it on the short side. And I think, you could have seen, for those who've been in the chat room, I had a huge days. Tuesday was a huge day, and then Wednesday with the NASDAQ breaking through the 50-day moving average. You're down 3 days sharply. Volume's heavy. You're seeing some support. Yesterday we got to an oversold point. So at that point, you remember the old adage, bulls make money, bears make money, and pigs get slaughtered. So you don't want to become a pig. So I'm covering my position. And actually, I flipped long intraday yesterday and held my positions up into the close and scalped a little bit off the long side. But I should have stayed long my position. So I've been giving my trader a bad time for not telling me to hold my positions overnight. So displacement is a great psychological defense mechanism to use when you're a trader. Anyways, all that is to say that this break has been very nice, and notice how it's very sharp and very sudden. Can you predict it? I don't think so. I think a lot of leaders were acting fine until Monday, Tuesday. I think, Chris, we saw on Monday the MDM went to cash, but we also saw a number of names starting to wobble to the point where we felt like we should, if the market's looking dicey, so you could sort of see it on Monday starting to happen. And so I think the model did a great job turning cautious at that point, and I think that was a good move there. Dr. Hill, what actually caused the model to jump to a neutral signal on Monday when things didn't look that bad?
Yeah, it really was a combination of a reluctance on the part of the majors to move higher, and of course the leading stocks also had that same kind of reluctance. So in other words, the model can go out of its buy signal not just because it's seeing an increased selling pressure, but because it's seeing decreased buying pressure, and not in a constructive way. If you'll look at the NASDAQ, you'll see that in the last 2 weeks it's been pretty choppy sideways in a more volatile manner than it's used to doing. So that was one key signal. The other thing was we had a divergence between the S&P 500, which had been in a downtrend for the last 3 weeks, and the NASDAQ, which is trying to hold its ground. And then, of course, there add to that a lot of headline risk, which increases the overall risk in the environment, because we don't know when they're going to actually start their talks. We don't know how far those talks are going to progress. So the market is beholden to these headlines. Therefore, if you're going to play positions, you either are going to play them short and sharp. In other words, don't leave money on a whole lot of money on the table overnight, or You're just going to sit in cash and wait out the volatility. And of course, in the VIX spiked to up above 20. And of course, if there were no announcement made today about the GOP House and Obama getting together to have talks, this VIX could have gone, shot up to 25, 30, and the market could have continued its sell-off. And again, so you flip a coin because you don't really know when these talks are going to occur and how they're going to go. So we still are in volatile territory unless they reach some sort of quick agreement here.
Yeah, I think it could also turn into a sell the news situation, and I would be watching very carefully to see how the market reacts on a rally here. I mean, you're getting the rally to some extent. Like I'm saying, you could see things were getting a little bit obvious. Down 3 days in a row, volume very heavy yesterday. Let's get these lines out of the way. But you can see this shows the divergence in the S&P and the NASDAQ. But you can see you're in a point where you're probably likely to bounce. The NASDAQ's pulling down into this area of congestion. It's underneath the 50-day, and I think when that happens, it gets a little bit obvious. I know everybody, all the pundits will go, oh, no, the NASDAQ's breaking the 50-day moving average, blah, 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 that's a terrible thing. And, well, it's not constructive. It's usually a point where you'll see a bounce because it gets a little bit too obvious. I'll get emails, chat IMs from people asking me, is this shortable? Is that shortable? Is this shortable? Is that shortable? So everybody suddenly wants to go short, and that's usually when you start to see a short-term, at least a short-term bounce. And so you're looking at this today. If you weren't long overnight, you're not really making money this morning, and if you were dumb enough to buy some stuff this morning, I think you might even be underwater. So I don't think you buy into these gap ups. You let them settle out because they will. You'll have a little back and fill. You'll have some stocks set up along their 10-day or 20-day or even bouncing off their 50-day moving averages. And you saw a lot of that yesterday. There are a number of names. I'm looking at Splunk here, and I have this up for a reason. But it came down, just dropped below the 50-day, bounces off the 65-day exponential. Kind of a weak bounce. So I actually short into this move this morning into the 20-day moving average, and this morning there's also the announcements of the third quarter institutional holdings and mutual fund holdings, and it was reported that Fidelity has a greater than a 10% position in Splunk. Now you might think, oh, that's wonderful, I'm going to buy the hell out of this thing, but they've owned this stock for a long time, and I've been watching this, and when they start having over a 10% position in any particular stock, they may start selling it. And for all you know, this was them selling it. It's after October. The report is for the end of September, so whatever their positions were. So they were probably, helping to drive it up, and they're probably the ones who were in supporting it every time it came down, which is what would happen along the 50-day moving average on the way up. And now it cracks, and now I'm thinking they could be selling it. Okay, now, and it's kind of funny because you see the stock moving up this morning on that news. It's like, yeah, we own 10%, so everybody come in and buy it from us because we want to sell it now because it's too big. And so you have to start thinking in those terms. That's one thing I watch for in stocks that have had long runs. If I start to see a shift in mutual fund leadership or ownership rather, then I'm watching for a potential correction in the stock, because they'll start coming out, and if that coincides with some market weakness, it'll exacerbate to the downside. So, that's one I've been looking at. Bounce off the 50-day. You got LinkedIn. To me, I do use the 65-day exponential as a reference point for shorting into rallies. If it goes past, I'm covering, but if it comes up into it and gets close, then I'm more than happy to short the stock. So I'll hit some LinkedIn up here around 227, 228 this morning. Another thing that's coinciding with it is if you look at our 620 chart, this is how I'm handling it. You start to roll over. You can see the rollover in here, and this occurs right up just about in here. It starts to give way, and you notice the MACD isn't really that powerful here relative to other spikes, and so to me that was kind of a sign to short it. But mostly I was basing it on the move into the 65-day exponential. Now that's not necessarily a magic moving average. It doesn't necessarily mean that stock's going to run into that necessarily. If it does go past, I'll just cover real quickly. But it made some sense. You got a little bit of overhead in here, and as you came down yesterday, you undercut this low pretty severely, and at that point you're covering the gap here. So that becomes a logical point to cover it short term, looking to reshort into a bounce. And this was my biggest short position on Tuesday, and I've been shorting it for a while. But it's interesting that I don't get any questions about shorting LinkedIn until it's here. And everybody, whoa, where would you short it here? Whoa, would you short it on a bounce? You know, where, blah, blah, blah. What would your downside objective be? So I guess what they want me to say is, well, my downside objective is 184, so just go ahead and short it here and you're guaranteed to make money, but that's not really how it works. You have to be on it in here when it's starting to waver. And I think last week I went on and on about my theory as to why LinkedIn was showing some signs of becoming wobbly, and so when the market breaks, it just busts its 50-day, and now it's violated that. And watching rallies as shortable rallies, I think, makes sense because this is a late-stage failure type of situation. We'll see how it pans out, but it doesn't look good to me. Anyways, couple of questions real quick. I'm going to go through, once I'm done with a few questions, I want to try and run through my buy list or my watch list and just see how these stocks are doing today and what we think about their positions right now. Somebody's asking, is the new Investors Business Daily Advanced Buying Strategy Study Program similar and or complementary to your secondary alternative, less obvious buying strategies? I don't know how I'm supposed to know that because, number one, we don't have anything to do with Investors Business Daily. Number two, we haven't looked at this program. And number three, we could care less. But the bottom line is that they're probably trying to respond to our alternative buying strategies, because I'm guessing that in their seminars and wherever else they interact with the public, I'm certain that they're getting questions. Well, you know, pocket pivots and Bible gap ups, don't you guys use those and they work? And people can show them examples, and so they're saying, well, yeah, they do work, so we better respond to this by coming up with something of our own. Which I'm sure it's a good, seminar, but I have no idea what the material is like. I doubt if they cover things in terms of pocket pivots and Bible gap ups specifically. They might. So anyway, somebody wants to know thoughts on Silica. I don't know why I need to have thoughts. It's just going higher. It's probably one of the few stocks that keeps going higher. Pocket pivot down in here. This was a Bible gap up at first, but it didn't pan out. It looked kind of weak actually, but it's continued to go higher, and that looks decent, I guess.
Yeah, we talked about this one in prior reports, and I mentioned it yesterday as well.
Yeah, I mean, we've been picking up the pocket pivots all the way along in here, so it's early. So, there's nothing to comment on now with the stock up. But notice it's just coming out of a base. So I think you have a nice long base, and this could set up a much longer move. So what you're watching for now is some sort of either a 3 weeks tight or some sort of pullback and the pattern setting up. And what's problematic about holding onto a stock like this is the fact that the market's getting somewhat dicey, and that creates some issues for being long. And my position is I'll just go to cash when things start to do what they did the other day. I'll just run to cash very quickly. And I have to say that in a lot of cases I'm very happy I did, because I talked about, I think, buying Trulia on pullbacks into the 20-day on light volume. On Monday, I could not hold the 50-day. I actually had a small position in this, nothing really big to speak of, but I was just testing it out along here. And I'll do that, and if it starts to turn up and off the line and I'm seeing what I think on the tape is some serious buying or meaningful buying, I'll come in and buy more and add to it. But if it doesn't and it starts to waver, it started to go higher on Monday morning, and then once it wavers and starts to break through the 20-day, I'm gone. I'm just gone. I don't even wait for, if you wait for a 50-day moving average violation, well, it closes below the 50-day here, and on an intraday basis violates the line here and then bounces. So I think this is another one I shorted this morning on the bump. We'll see how this goes. But to me, this looks weak, and I think it's possible you're trying to come out of this little short base here. You break out, and now you're failing. So to me, this is another late-stage failed base situation. So somebody asked, I think, what's a good question. Can the sell-off result in a faulty LSFB? If so, any insight into how we can discern a faulty LSFB? LSFB standing for late-stage failed base. No more than you can. I don't think you can discern a faulty one. They are what they are. All I can tell you is this break, you just forget about the market action. I'm just looking at this break. I'm not going to sit here and go, oh, this is all phony, and I'm going to step in and I'm going to buy every stock when it's down 20 points or 10% because, just because it's faulty and I can determine this ahead of time. You can't. There's no way to predict the future in the market. And when you think something is happening for a reason, and so we can surmise or say that the whole sell-off here is due to the budget logjam, the debt ceiling logjam, and all that, and that if once they announce a settlement, everything's going to be hunky-dory. But to me, it seems like a lot of this selling the last couple of days looks like heavy-duty liquidation. So it almost looks to me like somebody's positioning, or money is positioning itself for something, and it may not just be the news. So you have to, you can't really assume anything, and so I go with the price action. If I hadn't gone with the price action on say LinkedIn or some of these, I even shorted this the other day on the break here after flipping out from a long position to go short, and kaboom, and things breaks down very nicely, and that's a nice move. Same thing with the number of other stocks, like Splunk I think was short, Yelp was another one, and I think some of these stocks show you why you want to take profits when you're up nicely. In terms of 20 to 25 to 30% gains. If we look at ACAD, I know we had a lot of questions about this one, Acadia Pharmaceuticals. People asking us, how would you handle this? It's like, well, you're up 39% from the pocket pivot here to the peak here. Then, 39%. I think you start looking at taking some profits. Once it started to break down sharply, you could have blown the rest out if you say you sold half. But I think this definitely illustrates why. And I think it's a great illustration of why you should look at taking profits. When you're up 15, 20, 25, 30%, whatever, if you're hanging with something and using the 10-day moving average on something that's running up sharply as a quick stop, which is possible, you don't necessarily have to wait for a violation, and I never do, really. I'll come in and if I have a stock that's running up like this, and as soon as it pops that 10-day, I'm gone.
There was also a lot of volume coming in on that one on that day, that first big down day.
Yeah,
it hit my alert before it, it hit my alert around, I guess it was like 26. And I looked at it and I said, well, there's a lot of volume. Is there any news on this thing? Didn't see any news at that point. But, if I had a nice position and a good profit in this kind of environment, I'd be reducing my position by at least 50%.
Right.
And then I would have sold the rest of it by the time. I wouldn't wait for it to go all the way back down to like 24, because by then there's something wrong. And experience has taught us that don't ask questions now. Just sell, cut your position, and then ask questions later, because often the news doesn't come out until after the stock is down 10 or 20%.
Right. And if you think it's breaking because of the budget deficit talks, blah blah whatever. It's kind of silly to try and outthink the market. I think you have to react to it, and you could
have looked at a lot of other names as well in this industry group and noticed that they were not behaving this way. This was the one that stuck out of all the different biotechs that I track. So there was something to me that there was a news item that had not been headlined yet. All I needed to know was that the price volume was telling me to get out of the position.
Right. Did you own this thing at all, Dr. K?
No, I didn't have this one. But had I would have. It would have been a no-brainer to really, to sell at least half around 26, right. And then probably the balance as it went below 25.
Right. Let's see some other questions here, real quick. JWN is a short. I see what you're seeing here. It's a Head and Shoulders. Not really a big leading stock, though. That's one of the problems. You're not seeing this really big move. It's kind of just kind of blah. It's not a big. You can see other patterns of setup in the chart overall, and so you're here, and it looks pretty weak. I guess you could try it and use a stop. Maybe at the high of the day, which I guess was 56.73. It looks pretty weak. I noticed also Macy's looks about the same, but it's also not really a huge leader. But some of these things might be weak enough to come after, and here's your Head and Shoulders, and you can see when it rallied up here, up into the 10-day, kind of like what JWN is doing right now. It has broken down, and so the group is weak. So you could short, JWN could be a short, Macy's was a short, I think maybe it's even shortable into this move here, this gap up move into what's probably resistance right around the 43 level, looks like to me. So definitely one to keep an eye on, I think. And possible short sale targets. The group has been weak, so that's a good one to mention. I'm happy we've got somebody who's paying attention out there. Do you think this sell-off is different from the past sell-offs this year? Dr. K, I'll let you answer that one.
Well, no. It's so far it's showing similar drawdowns. You know, with every one of these corrections has generally been contained to within 5% all year around, and this one is looking to be one of that variety. You know, we had some nervousness before about the government being shut down and the debt ceiling issues, and the market contained the reaction to within 5%. Now it looks to me like if things don't get resolved this week, the market knows that they're getting close to the 11th hour. History shows us that with all the central banks printing money and with dire consequences if no agreement is reached by the deadline, or let's just say perceived dire consequences. I mean, there will be workarounds, but the market is not going to like if we go right through the deadline and there's no resolution. I mean, that could cause a serious gap down at the open. And I think the leaders know that, and so historically, when we've had this situation, they've always found common ground, and I think that the markets know that, so I wouldn't be surprised if yesterday's low was the low of this correction.
Okay. My position is it also wouldn't surprise me if we went through yesterday's low. You are bouncing today, and Nasdaq is running about 18.2% below yesterday's volume, so it looks a little bit suspicious and feeble on the bounce attempt on this big old gap move. And I'm always suspicious of gap moves like this, especially on purported news, because it's easy to manipulate the futures overnight, I think. And I'm very skeptical of this. Also, a lot of the action in leading stocks looks dicey. So, Dr. K, I have to say I'm not really bullish or bearish here. I'm just kind of watching to see how things unfold. My rules today, in a couple of instances, are telling me to sell short some stocks that are bouncing that have been prior targets, like LinkedIn, for example. And so I'm just operating on that basis, and I'm not really trying to figure out whether this or that is real or late-stage failed bases are faulty. I think a stock like LinkedIn was setting up as a late-stage failed base for a while, and I think you're seeing some others that are failing, and I think you have to just operate on that basis. But at the same time, it doesn't mean that you adopt a rigid point of view. You know, let me just an example.
Right. Actually, it's very critical, as we both pointed out, that if no agreement's reached this week, then we're in for a lot more volatility, and we've had volatility. And that was one of the reasons for the model switching to cash, and it may very well stay in cash because, again, it's very difficult to predict, when resolution is going to be reached and how much volatility will be will be a result of that indecision on both sides up to the 11th hour. So right. It is entirely possible. Obviously, you keep track of the market on a day-to-day basis in real time, and you can't predict these sorts of things because they are headline risk events. But again, I would, just for the sake of intellectual discussion, I wouldn't, if you had to put odds on it, I would not be surprised that there is, first of all, the resolution will be reached at some point. But between now and then, there could be a lot of volatility. So be careful.
Yeah. So that's all to say that you operate on the basis of what stocks are doing, and that's what I do basically. I don't start worrying about the indexes per se, and so let's just go. I want to look at some of these things here. Netflix, you can see there's a bounce off the 50-day. So you could see this yesterday. A lot of these stocks coming in, they're looking really ugly, coming to areas where they could bounce, and sure enough, that's what they do. Facebook breaks down, and notice how it comes right back on top of the 45 level, which is where you had the last real buy point in the stock, was this continuation pocket pivot here on this day. You can see that. And you move higher and you bounce right off the top of that. That was a logical area of support right there. Some of the other leaders. Splunk, which is another one I shorted this morning at the 20-day, and it's reversing now. It came down, and if you look at a weekly chart, it actually did bounce off the 10-week. So I keep both of these charts, a daily and a weekly, up on my quote screen, the main quote screen that I use, somewhere so I can see it in real time. And I watch for things coming down either to the 10-week or the 50-day, because a lot of times you'll notice they don't get to the 50-day, such as Splunk here. You notice it's above the 50-day on this pullback. Not Splunk, Yelp, I'm sorry. But it did hit the 50-day, and that's the first pullback to the 50-day since this breakout, which came from a big, let's do this, which came from a big IPO base, came public, set up in a base and kind of flopped around. So now we're looking, pulling back to the 10-day, that's a logical point for the stock to bounce. Is it going to hold? I don't know. I'm thinking it may retest and touch the 50-day, undercut these lows, and just sort of screw everybody up. That's why I felt that the stock should have been sold up in here and profits taken, given the nice move that you have, buying it early rather than buying the breakout. So if you're dumb and you buy the breakouts in this market, yeah, you make some money for a little while, but they give it up in 2 days, 3 days, and that's it. And your best moves have occurred from late August, where you've seen stocks coming off of their 10-day moving averages. The same thing goes for Trulia, which is, in my view, has failed now and is a doggy now. But the same thing here. You're better off buying it here rather than trying to buy the breakout. And even then, if you don't buy the breakout and you didn't buy it here, and you're at least trying to buy on a pullback along into the 20-day and it doesn't hold, you get out quickly, and you're doing a lot better than if you're a bozo buying breakouts, with the rest of the herd. And I think that's the key in this market, is using these turning points here to come in rather than buying breakouts, and I think that works a lot better. And so what I would be watching for now is precisely this sort of thing, as we try to come out of this. So when I'm saying I'm watching stocks, this is what I'm going to be looking for in particular stocks. I don't know if you get these, zing, zing, right back up to new highs types of things. If you do, then I guess that means that it all was due to the budget crisis. And I think Bonner's on TV right now. Actually, I have my TV on. I can't hear what he's saying. Is he saying anything exciting, Dr. K? You don't see him, right? Anyways, so that's
a lot of that stuff. I just do like for headline.
Yeah, and I think
I'm not just saying that he wants to offer Obama the ability to move. And, there's hope that they're going to reach some kind of settlement.
But no real settlement. So
the Republicans are offering a temporary debt ceiling hike.
Well, that's helpful, I suppose. But we'll see what happens. I mean, look at a name. Let's see Tesla here, breaking down, and then you have this wedging rally into the 10-day, and you're down to the 50-day. Now you're up on the day, but you're coming in. Not too much going on in here. Everybody wants to buy Tesla now, so you're going to see it bounce, I think, on the way down. I don't think I'd want to be holding the stock into earnings. So let's LinkedIn. You can see still bumping up in here. 65-day moving averages here. Market reacted briefly to Bonner's speech right now, and now I would expect that we could see a pullback here. We'll see what happens. We still got another half hour to go. So anyways,
6-week extension. They're offering a 6-week extension of the U.S. debt limit to allow for negotiations on a broader budget agreement. So it's just delay just push back the 11th hour.
Yeah, that's basically what they're doing. They're kicking the can down the road. Anyways, someone's asking about Solar City, which is up on my screen. This is kind of interesting. You had a big pocket pivot off the bottom here on a double bottom, and stocks tried to pocket pivot up and through its 50-day moving average here. That failed very quickly, but given the abruptness of this move, I guess you might expect some selling. It undercut these lows on this shakeout here, and you held it real tight, and it's moved back to the upside, and it's trying to hang along its 50-day moving averages. Solars have been a relatively strong group. You can see SunPower a little bit jagged there. First Solar has been trying to come up and around, but it's not really cutting it on this turn. You had a pocket pivot here, coming up to the 50-day, and now it's backing down into the 50-day, so it's losing a little bit of momentum. I think a lot of this has been pushed by the Chinese stocks. You have Trina Solar, Canadian Solar, which is not really Canadian, it's Chinese. And on that basis, that's dragged up the solars in general. But these stocks are going to new highs, whereas First Solar is not. Solar City is still mired in its pattern. SunPower is probably the strongest U.S.-based one. But I think all of these, you might keep Solar City on your buy list. Somebody asked, is it time to build a new list of leaders? No, I think you still operate on the basis of the existing one and just see how some of these stocks turn and try to set up, if in fact they are able to do so. So I think that's really all you have to do. You don't have to look. If you did, I suppose you'd be running screens and looking for what's acting well. This is interesting. Noodles is trying to hang in here along the 50-day. You did get some support here. This is kind of trying to break out. It's a little bit early. Remember that? That was a big fake out. And now you're kind of hanging, trying to come up off the 50-day. I don't know about the volume, so it may just be mired in here for a little while. I wouldn't be, I don't know, I wouldn't necessarily be running out to buy this yet.
Yeah, it looks pretty choppy still, and a lot of high volume days in there. So I don't think the base is quite ready yet. No.
NUS, New Skin, breaks down, bounces off the 50-day, and now it's bouncing off of there. So I don't, it held here, and it held the top of the prior base and held the 50-day. So that is obviously a logical area of support. So now it's bounced up. So not much to do here with the stock, I don't think. Yandex, same situation. Boink right off the top of the prior base, off the 50-day moving average. That's why I'm saying yesterday you could have seen this coming, a bounce coming, and you did have it intraday yesterday because everything was coming down into logical areas of support. So I kind of looked at them all as nice day trades off the lows once you flip off the short side and go back to the long side short term, but it's continuing today. So, but do you jump in and buy them? No, because there's no buy point there. ZRZO, that I don't know what that is. CRZO, okay, Carrizo Oil. Well, that one's been running up, and it just bounced off the 10-day moving average. There's no other buy points in here, so if you held on to this pullback, and it seems to me that there wasn't much reason to blow out of it because it held the 10-day moving average, then you're probably, okay there. So probably not a big deal. And the oils have been holding up much better. So let's see. Going through some of these, let's see what's jacking the most today. Of course, ACAT is making a big comeback. Just looked at it. Here's QCore. This one we get a lot of questions about. It's not really one to go long. Not even sure I'd go short it. It's very news oriented. So you can see the market's reacting to the wonderful news that the Democrats and the Republicans are somehow going to come up with a solution here, I suppose. Let's see. S-Fun, which is not so fun, but it's doing the same thing. You come right off the 50-day moving average, you undercut the lows here. So, this is all pretty textbook, I think. Whether it means that everything is turning back to the upside and it's all hunky-dory, I think you just kind of see how that develops. So not a big deal, I don't think. Cons, this is an interesting one. You had this breakdown. It's been setting up pretty tight in here, but you need to see it kind of set up a little better. You're trying to get like its pocket pivot move today up to the 65-day exponential. I don't know if that really works. Looked at Netflix, blocks. Again, the same exact thing, right off the 50-day moving average. So, it's it's pretty textbook here. It's not anything that's rocket science. You could see this happening yesterday in real time, and so you just get these bounces. Now the question is, do you buy into these? And I'd wait and see how this sort of pans out and let stocks set up. You don't have to rush back in. Somebody says, if market can recover and resume its uptrend with viable leadership, would you anticipate a Q4 1999 type move in leaders? Seems like the table is set with sentiment and this recent weakness. In 1999, I couldn't have told you that that was what was going to happen. So there's no way to be able to know in advance that you're going to have a move like 1999 was. And so, you know, Bill O'Neill himself on October 23rd, 1999 said this market is through. And he felt the market had pretty much run its course, and it was now going into a bear market. And then 4 days later, we get a follow through, and guess what? We're going in long heavy and very quickly. Yeah, there's no way to know. I love it. You know, people always want to know whether you can predict the future. You know, I know that O'Neill was out there saying that we're starting a new super cycle, and he doesn't know. He doesn't know. But my feeling is when you have newspapers to sell, you have to keep your readers interested, and I think that's one way to do it. You know, we'll start a new super cycle at some point. I just don't know whether right now is when it's going to happen. So, and you just don't know ahead of time. You know, if I did, I'd sell all my assets and raise cash and put it all into the market if I knew I was going to have another 99 and I could tell you ahead of time. It'll happen when it happens. You know, in the market, and we talk about this in our most recent book, there's an element of luck. You know, 99, me being able to be up 1,000% that year in my personal account was not entirely an act of skill. I got into the right stocks, you know, and bought them at the right spots and added at the right spots on the way up, and was able to leverage properly, and so I made a pile of money. And it was more a matter of creating your own luck. You've got to be in the right position to capitalize on a huge upside move in the markets like that. And so I think if you are timid and you don't take positions when you have buy signals, you're going to miss it. But also the idea that somehow you can know ahead of time and pile in with complete confidence and certainty is a very naive one. So, anyways, somebody asking me to consider doing a short selling webinar. Well, I think I cover short selling in these webinars, you know, and so I was thinking about this the other day because a few people asked about this last week, and it's almost to me like you're trying to force material in terms of, oh, I'm going to have a short selling webinar, and what is that going to do? Go over short selling techniques? Well, you can pretty much read chapter 6 of our first book and understand that, and you can read the book I wrote with Bill O'Neill that was published in 2004 to get a sense of short selling, and then apply that to what you're seeing in the markets currently. So I don't, you know, in terms of like getting out there and telling everybody rah, 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 you know, short now and this is it, and I'm going to have a short selling webinar because the market's going into a bear market. I don't think in this environment you can assume anything, and you have to be very careful, I think, in general. And so that's kind of how I'm operating. I'm not, like I said, I'm not bullish, I'm not bearish, I'm just watching how this pans out, and I'm taking the signals in individual stocks as they occur. So, BITA, B-I-T-A, Bit Auto Holdings, cheap stock, junky stock, I think, trades 483,000 shares a day. It's a $19 stock. Trying to run up today, but reversing and going negative. I don't know. I'm not really, I can't say I'm a big fan of this stock. 109% earnings growth in the last quarter. I think the last buy point was here, and so that's basically it. If you're long it, you know, I don't know, would I buy into this here? I guess you could if you're going to set your stop somewhere at a reasonable spot. Otherwise, it is a thinner stock, and when they come down pretty hard. So AFOP is one I like to call a flop. Violated the 50-day here. Now it's trying to rally back up in. Got some overhead. It's possible you had to pull back to the 10-week line, but this stock has done this many times. It's possible it's trying to find a low here, but I can't tell you. I was looking for it to kind of come out of here and bounce up through the 20-day, and once it did, I'm just out of it. And it comes down pretty hard here. Now it's bouncing. You know, do you come in and buy because it looks cheap? I think if you want to play the telecom group, the fiber optic group, I like these stocks better. I like Finisar and I like Ciena better, and the reason is these are bigger stocks. They're much more liquid than an AFOP, which trades, it trades like a thin stock, so you kind of have to account for that. I don't take a very big position in this when I do, 10% probably max. and it trades 933,000 shares, so it's barely not even trading 19 million in daily dollar volume. So it's a thin stock, but I think that the group, there's a definite turn in the group, and so my thinking is if these are going to work, then the institutions are going to have to go into, or they're going to look to go into the bigger names, the more liquid names that they can traffic in much more easily. And so I think that you see stocks like Ciena, which just won a contract with Verizon to provide these 100 gigabyte per second towers or whatever they are, or circuits rather. And then you have Finisar, which is another one. And these are kind of hanging in here in these bases, and they actually held in pretty well. I actually bought these yesterday off of their lows, but didn't hold it. Sold them into the close and scalped a little bit there, but just kind of watching them now. They're hanging out. They're not the names that everybody goes running into when the market turns. Everybody, you notice what happens today is that everything that got busted, everybody's jumping into because you had a sharp breakdown and they expect an equally sharp snapback. And in some cases you're getting that, like we're looking at this Yandex, which boom, boom. But it's a crazy trader, and so that looks kind of normal for the stock. InvenSense, I think InvenSense got another, you came down here and you broke to the 50-day, and this wasn't some pocket pivot? No, it just missed. Pull back to the 10-day and it's up. Somebody's talking about them getting some major design wins, and so I think the stock had that move. In my view, there's other stocks I could play, so I don't really pay attention to it. If you want to own the stock and you like it in here on this V-shaped breakout, then you could go for it. Dr. K, you have any comments on this one?
It's got a very good story, but it's a bit of a sloppy trader. So, it doesn't quite look perhaps like the base is ready. It has it, prior to this run, it was quite sloppy. In this current run, it hasn't violated the 50 days. So, if you're okay with the way it trades, I mean, you could be still, you could use a 7-week rule as your selling guide on this one. So, it looks all right outside of that. And again, the fundamentals are good. The story's good with this one. So.
Yeah. Truly is weak on this rally. Yeah, it is. I mean, there's a number of stocks that are weak, so maybe that's telling you where you don't want to be going. Let's see. Any more questions here? I'm just going to check my list here. I think Apple's interesting here. It's actually holding. It looked like it was shortable yesterday, but turned right back up through the high of the day, and it's trying to turn here. It almost looks to me like it could. I don't know, you're wedging a little bit in here, but it looks to me like if it holds the 50-day, this thing might edge higher. And so I don't necessarily think I'd be shorting the thing, and you might even consider going long if it can hold the 50-day, but that would be your stop. But kind of interesting that it's holding up. Amazon's another one of these big NASDAQ stocks that was acting very well, and then boom, and you come down into the 50-day and the 65-day exponential, and you bounce. There's a logical bounce there. Google is breaking down. That's another big NASDAQ stock, and I think that is starting to look, it's kind of a head and shoulders here, but it's one of these rolling sort of head and shoulders formations. Bounces off the 200-day line, which here is the 40-week line on the weekly chart, and now you're bumping up towards the 50-day. This might become shortable too, coming up into, say, 872, or even up to the 50-day up at 878. So you're getting some good momentum developing here. This is interesting. Priceline is another one. Blows down right on top of this breakout area here and off the 50-day. So again, you can see there's a logical justification for the bounce, and you could see this happening yesterday. So definitely if you're short yesterday, you're not sitting there short as you're coming down and not being a pig. And it is interesting to notice that I get the most questions about shorting this or that when you have the market down 3 days in a row and just getting pummeled. It's very interesting. Somebody says So he's Dr. K, you seem reluctant to discuss your individual holdings. Fine. It might be helpful over the next few weeks to discuss your percentage invested as a gauge of your enthusiasm for the market. I know from your 1999 trading you can quickly get invested to over 100%. John, I'd say for one thing, if I were Dr. K, I'd tell you to take off because I'm not here to discuss every little detail of my holdings and what percentage I'm invested. You know, the other day I was 200% short LinkedIn, and that lasted for exactly 2 or 3 days, but it helped me make about 15% net to my PA. So what percentage I'm invested is pretty irrelevant, and wanting to know that as if that's some useful a bit of information, I think, is kind of missing the point here. So, and I just want to point out I can talk to John that way because John is a friend of ours, and we've hung out with him in Vegas and whatnot. But I think, you know, Dr. K, what would your? I'll let you respond now that I fronted for you on that one. But Dr. K knows John.
Yeah, you know, it goes back to what I've always said.
Martinis in front of the cages at Caesar's Palace. It's like, oh man. Anyway.
Yeah. No, it goes back to what I've always said, and I discovered this for myself. This is the first year I was at O'Neill, and I got a chance to befriend Dan Morris, who was fantastic, one of the great traders that I've known, and because he had such a reputation at that point, I was a bit awestruck, and so we would have these marathon discussions about trading and philosophy, all these great topics. And there were a couple times where, you know, he doesn't talk about his positions because what he does is tuned to his trading style. And sometimes he would let slip that he had a position here or how much he had. And I, of course, would remember it, and I would go back and in the ensuing days track it. I didn't put my own money in it, but I would track it because I had this idea that, oh, well, whatever he touched turned to gold. So it was kind of interesting to know that, you know, a lot of the stuff he touched just, you know, was absolutely
not turned to gold. That's right.
You know, and you know, everyone's got their trading style. I think the worst thing, you know, Jesse Livermore said this, you know, about not taking tips, because if I tell someone, well, I think this stock is great, it's my favorite one, and I'm putting you know, 30% of my account, and I'm, you know, I plan to pyramid it, whatever. You know, that person might get so inspired to put some of his own money in, but I'm not going to be there to tell him when to sell it or how to manage the position or when to maybe step on the accelerator and go 100% long intraday because you got, you know, a buy point. I'm not going to be there for him, and so that person's just going to be held out to dry if he doesn't know what to do with that position, and chances are he won't, because if he's trying to replicate what I'm doing, odds are that his style is completely different from mine, or different enough that it'll derail him, you know, just at the wrong moments. And the trade for me could be a winner, but for him could be a loser. And incidentally, I do remember going back to Dan, because we'd have these talks maybe once every couple of weeks, these marathon talks, and I remember saying, yeah, that trade didn't really work out well for you, did it? Because it really cratered. And he laughed, and he goes, oh, you're tracking my trades. And he goes, actually, and he showed me the blotter. He said, no, I actually made a little bit of money on it. I'm just very quick. He said, I'm much faster in terms of my trading style than you are. You actually hold positions, which is why you end up making more on your blotter than I can on mine. But he said, that's my style. I just, you know, he's like a jackrabbit. But of course, you know, even back then, you could be a jackrabbit and turn, what did he turn? You know, a few thousand, and after about 8 or 9 years, he had hit his first $500,000, and then from there he went to about well over 2 million, and I guess that represented sort of a pseudo retirement point for him.
Let's see, Lulu is getting questions here. Whoops. Lulu is not something I would be shorting here. I mean, it would need to break the 50-day moving average again to get weak, to show me some weakness, and I'd be shorting. I don't know, would I go long it here? Hard to say. Would you go long Lulu here, Dr. K?
I don't like it one bit. No, I wouldn't. I have no interest in this.
Okay.
I mean, if I'm going to go long anything, if I had to force me into something to go long, I mean, I'd probably take a position in Tesla, since that's been the bona fide leader. But it's quite choppy right now, and you know, it's gone up quite a way. So I'm not interested in buying Tesla at this juncture either.
No, I wouldn't do it going into earnings. You know, unless you already bought it, you have a huge cushion. I guess you could, but you know, I played the stock and done pretty well with it this year. and trading it like a banshee, but I don't think I would get into buying it ahead of earnings in anticipation of it doing well. I think the odds are against it this time, and some of the selling here to me looks real. It doesn't look like it's just news oriented. So. If the market is up 300 today, would you still sell this rally? I don't think I necessarily said I would sell the rally. I'd watch individual stocks here. That's what I'm doing. So like on a LinkedIn, I'm watching this rally. To me, this is a broken stock, so I'm watching this rally as shortable, and I still think it can be tested on the short side. If the market rallies, it's a one-day rally, and you're probably looking for some backing and filling, so I don't think that there's any rush to have to jump in on the long side here and be heavily long all of a sudden just because the market's up big today. I think the market, as I already said, was in a position to bounce, and having played the short side, you could see that quite clearly yesterday. And so there's definitely a day to be covering shorts and even looking at possibly playing some of the bounces short term. So I'm not really taking a position here that you need to sell this rally. If you find that you have positions that got clocked, and I think it might be prudent to trim some of those into a rally, because there will be points if the market does set up again and go, I think there'll be plenty of points to come back in. So there's no real hurry here, and you could have a possibility of some selling the news sort of thing here. We'll see. I mean, the market's up pretty good right now. Looks pretty good. Volume is running. Let's see. On the Nasdaq, it's now minus 19.13%. So it's actually been dropping on the rally. NYC volume is up just under 9% compared to the same time yesterday. So you're seeing some strength in here, but they're all logical bounces. So I think if you're going to play it again, you could see it yesterday. It wasn't rocket science. Everything coming down to the 50-day or on top of prior areas of support, you can step in and try and buy some, which is something that I did. And I didn't want to hold anything overnight, though, because I think the gap thing is basically just that. Anyways, let's see, any more questions? Somebody says, turning to gold is a bad term this year. Gold down 22% year to date. Well, I don't think there's really been any buy points in gold that have been meaningful. It's been in a downtrend. It's had a few attempts at pocket pivot moves. Not here. Let's see. Actually, not really anywhere along the lows. It's been coming down. So, I'm not sure what that question's about. I don't think that we've been, while we've pointed out pocket pivots in gold, it's been very difficult to play them, and they failed very quickly.
Yeah, so. I saw one. There was one. I mean, if you look at SLV, for instance, because we know that's tends to be 2 to 4 times as volatile as gold. SLV hasn't really. I mean, if you look back over the last several months, you had one clean pocket pivot on August 8th, where it just missed the 50-day, but that it had a nice run from there, and you'd be crazy to be to just sit in that. I mean, this is a perfect pattern where you want to start taking profits as it goes higher. And as far as GLD,
yeah,
you had a pocket pivot on August 15th, and again, it's somewhat constructive, but it didn't really go very far. And as it starts to roll over, you'd probably want to just take your profits.
In here, as you break into 10-day, is that what you're saying?
Yeah, as it rolls over, and it then it goes to your 10-day, and then and then undercuts the 10-day. I mean, when it undercuts the 10-day, I'd be out of it. Be happy that you made whatever. What is it?
Right.
About 3% milk fat on the position, and then it had another pocket pivot on big volume on September 18th. But that's after you're in a downtrend, and it just undercut the 200 days. So I wouldn't call that a really constructive pocket pivot to play. I only see really one good one in this whole pattern, and it wasn't really very good. It resulted in maybe a 3% gain. SLV would have done better for your money, hitting that one on
right.
the
Right. Anyway, Somebody says you sound great today, Dr. K. I think you sound great every day. Oh, I think they're talking about your mic.
Yeah, the audio. I think it. You know what it is? It's interesting because
Uh-oh.
I upgraded to the new. You know, everything's always a bit of a mystery when it comes to technology when the solution isn't apparent. And my last computer, it was, you know, definitely had something to do with the internet, so that was fixed. Then but that only partially fixed the problem. So we were still scratching our heads, and I thought, well, it must still be the internet, but it wasn't. It turns out that just replacing the old computer with this new Sherman tank is what did the trick. Apparently, the old computer had some software misgivings on the audio side, and of course, this is brand new, so we're good to go.
Okay. So it was a hardware issue. Somebody's
It was both.
asking.
It was an internet and a software issue. It was a combination of issues.
Okay. Well, that's good. At least we know now we won't have that issue anymore, hopefully. Dr.
Right.
K, any advice on using the volatility? Nothing like, I'm not quite sure what that means. Should we be using them as a hedge or just scalp them?
Are they talking about like UVXY, VXX, XIV?
I believe so, yeah. I mean, I
Yeah,
got UVXY up here, but you know how to use the volatility. I guess if you were long this when the market started to break, that was great. And I guess if you're short it over the last 2 days, that would have been great too. But it looks like a lot of hindsight investing to me.
Yeah, you have to with XIV. You know, there's two strategies that you can use, and you know, the UVXY strategy it's still in beta, but there's longer term approaches to using it quite profitably, and so I'm going to be obviously apprising members of any changes in signals, but it's going to be a bit of a longer term approach. Therefore, it's going to be the opposite of a day trading or short term approach. And again, I need to see this in real time, but the results are looking good. The other type of strategy is not something that can be done over email because it's a very quick day trading strategy, and that continues to prove out. I've been using that real time since July of last year, so we're talking now about 15 months, and that strategy has a very low risk associated with it. In fact, the lowest of any strategy I've created. The only issue is that you have to be on top of it. I have to be on top of it whenever there's a changing signal. I mean, you can't miss. You got to be there right when the signal occurs. And so it's not a very practical strategy, but it is, nevertheless, the risk reward on it is exceptionally good. But you know, I'm telling you all this just because there's lots of ways to skin a cat, but it's not real practical in terms of even my trading. I prefer to be more of a longer-term trader. By longer-term, meaning not a day trader. And so this other method, UVXY method, I think bodes well in terms of my trading style, and therefore also being able to reflect that to the members on our website.
Yeah, and you can see you just using the simple 620 chart. You know, that's one way to trade the UVXY too, if you want to. Here's a buy signal here. That had a nice move. Pulling back in here, you know, if you had bought in here, you don't necessarily have to wait for it to. You could sit through this possibly, or come back in again and just day trade, then go short, you know, and then here we go again, go long, and again short. Doesn't really break, and that's where you are right now. So you know, there's ways to trade it if you want to do it, and you can come up with simple systems for doing it, I think. You know, but I don't know, using it as a hedge or using or trading them. I think it depends on what your objectives are, as a, you know, in terms of are you just hedging your portfolio, or are you actually looking to trade actively and pick up profits short term? So it's really, I don't think it's one or the other. It's whatever's appropriate for yourself. Somebody points out that John Taylor, who runs a currency trend trading fund, is shutting down due to the effects of government intervention on trends. Maybe this is the sign of the beginning of the end for trendless markets. You mean we know a lot of people who actually shut down funds. A lot of trend followers shut down their funds a while ago, a couple years ago, and that didn't mark the end of trendless markets. But you know, again, I don't think you need to get involved in defining markets as trending or trendless or whatever. In my view, all you have to do is pay attention to the stocks. and that's it. You don't have to worry about is there some trend? Is the window of opportunity open? I advocate you can't tell when the window of opportunity is necessarily open, and you certainly can't tell how wide the window of opportunity is ahead of time. You know in hindsight, and that's pretty much it. So I don't think you need to worry about whether the market's you're in a trending market or not. As far as I know, if I can play a stock like this from here to here, that's a nice trend, and that's a very profitable trend. If you could have played a move like this, that's a very nice trend and a very profitable trend. If you could have played a move like this, from way down here when we first were telling you to buy it on the Bible Gap Up, that's a very profitable trend, and that's a trend. So I don't understand what people are talking about when they say that we're in trendless markets. There are trends. You just have to find them. And I would say that's really what the problem is. And once I got outside of having to worry about what the indexes are doing, and earlier this year shifted my own strategies towards operating on the basis of what stocks are doing, and also trying to take at times a contrarian view when things start to get very ugly, thinking in terms of maybe that's the time to step in and pick up some stocks. And when things start to look very rosy, maybe that's the time to take some profits, especially if you have positions up 15, 20, 25 or more percent. So and so I think that was really the way to operate. So I'm just reading some questions here. Someone talking about John Taylor, who runs 8 strategies, and only one of them is trend. So yeah. So there you have it. He's got one strategy out of 8, and that doesn't necessarily tell you that that one guy shutting down his fund means that you're returning to trending markets. I would say the markets are trending. It's just that the trends have to be hunted down and found, rather than thinking that someone's going to hand them to you on a silver platter and it's that easy. And I would argue that investing is never that easy, and it never has been. Just like the questions about, well, how wide is the window of opportunity open, or do you think we'll have another Q4 1999? Who knows? Maybe you will, maybe you won't, but you won't participate if you sit there and you don't know what to be looking for in terms of the positions to take and in what stocks, or rather even what vehicles at the time. So I think that overall the trends are there, and I think you just have to look for them, and that's what we're trying to do all the time. So what is a trend right now? It's a little bit obfuscated. You have a sharp bounce today. Does this mean that we're returning to normalcy? I think you have to wait and see. Watch how this pans out. Maybe it does continue. If you're comfortable buying some positions here that look like they might be okay, then you could probably do that. But I think if you were going to do that, yesterday was the day to be doing that. It's a little higher risk here with things gapping up. So I think that's really where you're at. And the other thing is you might have a pullback that might be viable. So my view is take your time and kind of assess things. Don't get sucked into these bounces thinking that everything's going to be hunky-dory. Let the things kind of set up, and it might take a few more days. Dr. K, do you have any general comments about how you would approach what's going on right now?
Well, we know that, like I said, we're potentially still in volatile territory. But if they do reach an agreement on this 6-week pushback, then perhaps that gives the market some breathing room, and perhaps therefore we will see a continuation of this uptrend, and then of course we'll see once again as we get closer to the 11th hour nervousness and more volatility creep in. But if they reach some sort of a soft agreement today or this week on that 6-week issue, then I would be more bullish than bearish, and I would be looking for continue to look for the trends in leading stocks.
Yeah. And right now, I don't think any of that is really necessarily clear. I think you just kind of watch and see how things pan out, and that's basically what we're doing right now. So I would say just watch our pre-market pulse reports, and we'll see what we come up with. If we see any stocks that we think are actionable, at least that's what I'll be trying to do. We'll put them in that report if we think things are coming into viable spots. I think yesterday was really your shot. If you're going to try and buy into the dip, that was the logical place to try and step in. And I think it's just a matter of seeing where we go from here. So, anyways, don't see any more questions up there, so I think we're pretty much done. Thanks for showing up, you guys. If you have any questions, remember, you can email us at, is it info@virtuousselfishinvesting.com, Dr. K? Is that
Yes.
It?
Yes, that's right.
Yeah, you can email us there, and we'll do our best to answer your questions and just see where we're at. But Dr. K, we're also getting a request for you to show up in the chat room. So, any comments there?
Well, I'll make my appearance once in a while, but I find that it's just it often is more efficient to get the emails, which I get a voluminous number, as well as, I mean, people do reach me through other means as well, and I find that I can then hit the nail on the head for whatever question is pressing. Chat rooms, I find that before I know it, 30 minutes has been sucked away, and I almost a little bit resentful because then I get backed up in other things, and I don't feel that I'm really my efforts for that 30 minutes is well returned. I'd rather, if I spent 30 minutes answering emails, which is what I do every day, depending on how many emails I've got, that I know is time well spent because I'm answering the question and I'm doing it in a way that I can get through an email in a matter of sometimes seconds and answer the question. So.
Okay, so all that's to say, if you have questions for Dr. K or want to ask him about something, email him, and he will respond as efficiently as he can. Anyways, with me, I come on there probably once a day for a little while. There is a lot of, like somebody says, there is a lot of noise, and I think a lot of dumb jokes and attempts at humor and stuff like that. But I guess that's what's going to happen when you get a bunch of, and in some ways it seems like a locker room environment. But I think people seem to enjoy it, those who are on it. But it's probably not the best venue for us to discuss the market. So I think all this gets back to the idea of just emailing us. Anyways,
I would say definitely do the info@virtuousselfishinvesting.com rather than individually,
okay.
Because then we're all going to see it. If you email me individually or Gil, then we might have our hands tied for 2 hours or whatever, and then I don't know what you've sent to Gil, and he wouldn't know what you've sent to me. But you just send it to info, and we'll all see it at the same time.
Right, exactly. So, anyways, everybody, that's all we've got. You got a one-day bounce here. Stocks have bounced hard off of logical areas of support. So, probably yesterday, maybe midday, maybe earlier was the time to step in if you were going to look to be buying, and at least playing a short-term bounce. It's not clear to me how this is going to pan out. So, but I'm just watching individual stocks, and like I said, I was shorting some stocks. I'm looking at, say, LinkedIn here. It's still hanging there, not really doing much anything. It came in a couple, $3. I traded it once today. Tesla, I don't know. That's not really happening. Trulia, though, is another one that's kind of weak here, and I think that stock could probably head for the 40 level. I think something else is wrong with it based on what you're seeing in Z. So the group seems to have weakened. Anyways, that's all we've got. Again, if you have any other questions, please email us, and we'll be more than happy to get back to you as soon as we can. Thanks for showing up, you guys. We'll catch you next time.
So long, everyone.